Shares of Target getting a boost this morning after a strong beat from EPS that offset weaker than expected sales in its second quarter. Heading into the fall, the company said it's gearing up for the biggest seasons of the year, but in the face of near-term challenges, Target lowered its EPS guidance for the full year. Joining us now is Corey Tarlowe, Jefferies Vice President for Equity Research. Corey, thanks so much for joining us today. Let's dive right into these results from Target. To me, the market reaction, Wall Street reaction, a little unexpected, but what is your takeaway?
Great. Good morning, and thank you for having me. So I'd say that there's three key points to highlight here. Number one is on comp, number two is on margin, and number three is on the outlook. So firstly, on the same-store sales metric or comp. So comp came in at around down mid-single digits. That was below consensus of down low single digits. And it was mostly traffic driven. I think the good news here is that we did see some better momentum in consumables categories like food and beverage or even beauty and essentials. So that shift from wants to needs is in full effect at Target at present. The second on margins were actually significantly better than what we saw last year and also what we expected. This is predominantly driven by better inventory positioning. So inventories were down 17%, down 25% in discretionary categories. The markdowns were significantly lower than last year, and you also saw massively lower freight costs. And then thirdly, on the outlook was obviously lowered, as you pointed out, but the good news here is I think a lot of this was expected. So they're expecting now a mid-single digit same-store sales decline for the remainder of this year. That's relatively consistent with what we saw in the second quarter. So it feels like that's a relatively achievable bar, especially with the earnings guidance now lowered about 10% from the prior threshold.
I'm going to really piss off a lot of students out there, Corey, but I'm going to mention it. Back to school. What do these results say about how back to school season has gone, is going, or still will go when some of the K through 12 students head back into the classrooms and some of those very uncomfortable chairs?
Sure. Well, what I would say is that the back to school season thus far has illustrated some promising early reads. But again, it is still very early. We only have about a few weeks of spending data that we can reference. But the data so far does look promising. We've seen some surveys from and estimates from the NRF and other retail organizations and other consulting firms that all point to sales estimates being up for the overall retail sales during that period to be up about, call it low double digits, of which Target is likely to command a significant share of that. So it is something that I would presume to think is a catalyst for the company ahead.
So, Corey, one of the things that execs express caution around is the return of student loan payments and what that could do to consumer dollars. What is your expectation with regard to the impact there to Target? Are they guiding enough to, take into account the potential impact from that?
It's a great question, and it's certainly going to be a headwind, and probably a headwind that's more acutely felt among the Target consumer than, say, a consumer that shops at the dollar stores. So the Target customer is probably slightly more affluent than a dollar store customer. Target customer probably has a college education and may have loans as well. And we did an analysis that actually looked at the percentage of customers that Target, Walmart, dollar stores, Costco, BJ's, and what we found is that the Target customer is actually one that could be more impacted versus some of the other retailers that we cover heading into this season.
So are the forecasts then as accurate as they could or should be, considering all of that?
Well, I think that what it just means is that there could be some near-term risk. And as you heard on the call today, that just concluded about a half hour ago, and this was highlighted multiple times by the management team as something that they are being cognizant of. So it does seem like this is something that they are taking into account with the new guidance that's been set.
Corey, we'd love to get a vibe check of those that have been able to listen in on these earnings calls, which sometimes they're very bland, they're very boring to listen into, but there's some nuggets that can be pulled out, and you can kind of catch the tone and tenor of what the executives are that are managing through this period. What is the vibe check that you would give to the Target leadership and Brian Cornell and team and squad?
I'd say that it's one of cautious optimism. I think that the consumer has been, while relatively resilient, there are some factors that are certainly weighing into the caution that the Target management team needs to keep into account as they think about the results ahead. We talked about student loans. Obviously, earlier in the year, we saw lower tax refunds. We've seen lower SNAP payments and all these other headwinds that the consumers faced. So I think that all of these things have had to be contemplated in the tone of the target customer. Nonetheless, we have seen some slightly promising results thus far into back to school, although it's still early. Like I said, I think it's cautious optimism. There's still a bumpy road ahead. But as we do think about the trajectory for Target, we do think that, and this is really core to our thesis, that the margins should be better over time from about 5% this past quarter to 6% over time, and potentially even 7%, which would be consistent with their historical average. So, and again, they're targeting 6% by the end of next year. So we do think that is achievable. It will be a bit of a bumpy road to get there, especially on the worse than expected sales declines that we witnessed. But nonetheless, we do think that a certain element of caution has definitely been embedded into the tone of Target's management team, which I believe to be prudent.
And Corey, I want to really quickly get your take as well on TJX. They also put out their results today, better than expected. What's your takeaway on TJX and how well they navigate through the balance of the year?
Well, it's one business that does tend to do very well when a consumer is a little bit stretched. And it's a company that offers great affordability on name brand products. And they've seen remarkable momentum in not only apparel and accessories, which has been a key tenet to kind of our thesis as we think about the trajectory for this business, as apparel is a very significant portion of the overall sales. But we've seen a little bit of a turnaround in the home business here. And that business has lagged for quite some time following the COVID bump that we initially saw. So now that we've rebased the home business, there's actually, I think, a much greater potential for better profitability in this business. And it's one reason that we're very optimistic on the prospects for TJX ahead.
Corey Tarlowe, Jefferies Vice President of Equity Research. Corey, great stuff here. Great to have you here with us breaking down some of the earnings results this morning. Appreciate it.
Thank you very much.